Liquidity and structure is the most important thing you want to use to get good trades. And I'm going to be showing you how to use both liquidity and structure to get good trades in this video. But before we go into that, if you've seen me for the very first time, my name is Divine and I'm a forex trader. What I basically do on this channel is to document how I trade and as well show you the mindset behind my strategy. If you want to be seeing like this, I want you to smash the subscribe button, like this video, and drop a comment. I'll be right back. Now, the first thing you want to understand is to simply understand what liquidity is and what structure is. I'm going to be giving you a sketch first before we go into the main chart, right? What I want you to understand first is simply what liquidity is and what structure is. Now, when you hear liquidity, it simply means stop losses, right? Like where there's pools of stop losses. And most times it can appear as an equal high or an equal low. That means there's liquidity here and there's liquidity here. Liquidity is resting above this place and liquidity is also here. Now it can appear as a trend line where price is simply giving you trend highs and low, right? So this place is simply what? Liquidity, right? Liquidity. Now you want to also understand the idea or the concept behind liquidity, and it is such that price will always make a fake move for price to make an actual move. The fake move is refers to as liquidity sweep, and the actual move is refers to as liquidity grab. In this case here, whenever price make a liquidity sweep, price tends to go for what? A liquidity grab. And most times, this is referred to as sell side liquidity, and this is buy side liquidity. If price want to buy, price is likely going to take out sell side liquidity and then buys for the buy side liquidity. But if price want to sell, price most times take out buy side liquidity and go for sell side liquidity. So this is the concept behind liquidity. Same thing goes for the trend line. In this case here, price is simply printing sell side liquidity that price will take out for price to buy. Now to structure. Structure is simply what tells us how price is moving, right? How is price moving? Is it going to the downside, highs and low, or is going to the upside, highs and highs? You want to simply understand how to use these two things to be able to make good trades. And for structure, it tells you how price is moving, if price is moving to upside or if price is moving to downside. Now, liquidity tells you where you should buy from. That means what liquidity is telling you is simply the point you should buy from or you should sell from, depending on what your structure is saying. That if your structure is saying you should buy, liquidity will help you to know the point you're going to buy from. I'm going to show it to you right now on the chart. Let me clear all of these things first of all. How do I even highlight all these things? Let me just leave it anyway. Now, I'm going to be using this live example that I analyzed earlier on in my video. That means if you are aware of this trade I analyzed here on GPUSD 3 days ago, this is actually how it's playing out. Liquidity and structure. I already know where price is coming from and where price is going to. And I analyze the trade saying that price is likely going to take out this liquidity point here and then head to the downside. This is actually how it's playing out. Liquidity and structure. If you look closely here, price induced liquidity at this point here, took out liquidity and went to the downside. Price also induced liquidity at this point here, took out liquidity, went to the upside, taking out liquidity, coming to the downside. So price moving based on structure and based on liquidity. And I've explained to you what it is liquidity is and what it is structure is. Now in this live example here, or in this case example here, or let me just use this recent trade I analyzed today. Being Wednesday, the 11th of December, and time is 12:12. I was able to identify this trade during the London section, and I used that simple concept of liquidity and structure to understand how to enter this trade. Now, if you look closely here, price induced liquidity at this point here, equal highs, and price also induced equal lows here. Now, a good entry on this trade could have been a buy from this point to take out this liquidity. That means if you had bought from this place, you'd have big money, right? Now, because I understand that structure is telling me to go to the downside, I simply opted in for the what? Sell side. And I opted in for the sell side because the structure telling me to go to the downside and there's liquidity here that price just swept out. And as you can see, price took out liquidity and gave me a change of character at this point here. Then I took this sell to the downside. So your ability to understand where liquidity is, and most importantly, where structure is telling you to go to, helps you to understand and make a good trade. Now let me show you another trade as well too, which is simply AUD. Now this one is still running. The same principle, the same concept that price have to always induce liquidity, take out liquidity and move to the upside. As you can see at this place here, price induced an equal low, took out the equal low, gave me change of character, and price is simply heading to the upside. And now I was able to identify this because price has given me a structure to the upside that I was able to identify on the 4 hours time frame. Your ability to understand how to use structure and liquidity gives you a very strong edge in this particular trading. Now I'm going to be analyzing, I don't know what pair I should analyze. Let me analyze a different pair, probably AUD, and probably let's see where price is going to likely go to, and let's see how it's going to play out. AUD, okay, let me see this. Now I'm going to clear everything right now and start all over again. Now for us to analyze this pair, we want to simply go to daily time frame and understand the overall market structure. Sorry, we want to understand market direction, where is price going to, and how is price moving. With this, we can be able to know how you're going to follow price to where price is going to. And for us to understand direction, we want to simply zoom in properly and see the bigger picture of where price is coming from and where price is going to. In this case here, we can see that either price is going to the upside, but we want to always use the trend to confirm that price is really going to the upside. For example, if you look at the trend here, you see that price is simply giving us a trend line here, right? There's a trend line here, and price is simply giving us an uptrend. And this is acting as a support, but here is acting as a resistance, right? Again, if you want to identify another resistance, you can see that this place is also a resistance level. Now, our interest now is to simply identify key levels and simply use key levels to understand market structure. Remember, daily time frame is giving us what? Market direction and key level. Now, for us to identify our key levels, we want to simply use here as our resistance key level. We want to also use this place as our resistance key level, and here is acting as our support key level, right? That means on this particular pair, we're able to identify 3 key levels: key level 1, key level 2, and key level 3. Now, our interest now is to understand the market structure that price has created from these key levels and be able to know how we are going to follow price to where price is simply going to. In this case here, price is going to the upside, but the key level is going to determine if price is going to continue or price is going to fail. And for us to do that, we want to do that on the 4 hours time frame. On the 4 hours time frame, we are looking for market structure and supply and demand zone. And now for us to identify it, our interest now is simply on the key level. How did price move from this key level to this level here? How is price moving for us to know what we're going to do next? Now, if you look closely here, price was simply creating a trend line here. A trend line here, right? And you look as if price broke out of the trend. Our interest now is to simply understand how price has moved from this particular key level to this place that price got to, and be able to know how we are going to follow price to where price is going to, and possibly know what to do next. In this case here, if you look at this particular structure here, you can see that price simply gave us a break of structure to the downside, right? Here is simply the high, and this is the low. And in this high to this low here, price has created a supply zone, and here is simply what? The supply zone. That means we are expecting a buys, yes, but we want to look for how price is going to behave at this point if price comes to this place to know if we're going to sell to the downside or if price is going to fail this zone and continue to the upside. Then we can know how we are going to join price. Remember, we are identifying market structure here, and we are identifying supply or demand zone. In this case, we are able to see a supply zone. Our interest now is simply go to the 1 hour time frame and refine this zone to become a point of interest, and then allow price to induce liquidity, and then we use liquidity to enter the trade. And that's happening on the 1 hour time frame. Now, for us to refine this particular zone to become a POI, we want to simply use a specific candlestick to represent this whole place as a POI. And in this case, we're simply going to be using this gap here, because this gap appeared at this point. There's a reason there's a gap here. Simply want price to simply fill in this gap here and probably know if you're going to continue to buy it or we're going to continue to sell. So in this case here, for us to make a good entry in this particular point here, we can simply follow price to the upside, because as price is moving, price is also creating structure at this point here: a swing high, a swing low, a swing high, a swing high, and most importantly, this place is already acting as a swing low, because right here is simply a demand zone here. The price simply also induced an equal low, which is liquidity here, which is liquidity here. Let me take it to the 15 minute time frame so it will not be lost. See what I'm saying here? Price induced equal low here. There's liquidity at that point. That price is reacting from here, and most likely this is a strong low. Now, an entry on this particular pair now is simply for price to retrace a bit, maybe half of this place, and then we'll look for a buy opportunity to fill in this particular gap that price has created at this particular point here on the 1 hour time frame, this particular level here, right? Now, I'm not going to take this trade because it's not really very quality trade for me, but I'm just giving you a sketch of what it looks like, how to use liquidity to be able to understand where to buy from. In this case here now, for us to buy, we're already seeing that price taking out liquidity, and we can simply buy from this point and target price to fill this particular gap here. For example, this is what it's going to look like. A long from maybe you retrace back to this place, our stop loss above below this particular swing low here, and target this particular high here to fill in these gaps that price has created at this point here. This is a very good trade, but I won't take the trade because I don't know. This is simply how you use liquidity to understand where price is likely going to go from and how price is going to move. That'll be all for this video. I'll see you in the next one. Peace.